All right. One last slide here for this module was the word I was looking for earlier. So once again, thank David, and David gets the brown nose for the award day, and a star. Last section here dealing with RESPA. Indiana passed July the 1st. And in case you haven't noticed, folks, all the stuff passes on July the 1st, including some of the new real estate laws and some of the new title laws that came into effect because Indiana works July 1 to June 30th as their year. So currently we are in the 2017 year for Indiana because we are past July the 1st of calendar year 2016. Several states have passed this, what they call the Good Funds Law. Indiana was one of them. Minnesota and Missouri are some others. What the Good Funds Law is it requires or limits electronic transfer of money so that there cannot be any fake money. Used to be, you would pay cash, and people started to come up with counterfeit cash, so they wouldn't take cash. They went to money orders and certified cashier's check. Well, then guess what? People started finding a way to scam certified checks and cashier's checks. So what Indiana did and some of the other states come with this Good Funds Law, which now says if one person, a single party, if the title company receives funds from a single party that is an aggregate of at least $10,000 or more, the money has to be wired in to the title company. No longer are certified or cashier's checks acceptable if it's over $10,000. Okay? So I just had one the other day. And if you start buying into a conventional loan, what's a conventional loan for you folks out there? Conventional loan, what's that mean by definition? Typically, it's an 80% loan to value. The other 20% is what? Equity, right? Or what's equity called? Alicia? No, that's equity. Equity's called equity. Yes, Alicia, that's correct. What's the I'm sorry, what's the other word? Down payment. 20% down payment. So on a $100,000 house, how much you bringing? 20%, 20 grand. Guess what? That's over the $10,000 de minimis limit. So what I'm telling you is pretty much anytime your client gets you're not an agent. I was going to say, anytime the client uses a conventional loan where there's 20% down, he's almost always going to be wiring money. Good Funds Law was created for you guys to protect so that no one brings you as a title rep bad money. Okay. Now, here's the problem with this. Here's the problem. I dealt with a title company when this first started back in '09, and they read the rules to be if they receive more than $10,000 from a single party, they have to wire the money in. Meridian, oops, I wasn't going to say the name. Meridian Title back in late '09, we had a deal where the downstroke or the down payment was like $9,500, $9,600, and we had $1,000 of their earnest money, and they said, well, that aggregate total is more than 10,000. And the fact, even though it's coming from two different people, they saw it as one person since it was the buyer's earnest money and the buyer's down payment. Right? So the long and short of this story is the buyer brought 9,600, we brought 1,000, and both had to be wired in because the aggregate total for their one party was over $10,000. Okay? Now, on the surface, that may not seem like a big deal, but here's the problem. We were the listing agent. So, anybody know a bank that wires money for free? No, it cost me to wire the earnest money. Take a break for a second. Who's the earnest money? Which client is the earnest money? That's the buyer's client. So it's not even my client. But yet it came out of my bank account and the title company required me to wire it. So I ended up paying the $22 to wire that money to the closing. All right. So therein lies another problem. It was the buyer's money, but I'm the seller's agent. I ended up paying for it because I was holding their earnest money. And Meridian Title said, well, 96 and the 1,000 you got, that's over 10,000. You got to wire it in. And they deemed it as being a single party to the real estate transaction. Most lenders now, or most title companies, are going to go, no, that's two parties. But I mean, it's very seldom you're even going to get that close anymore, because I mean, we were like 500 or 600 bucks over. Most of the time, once you start buying a conventional loan, you're not even going to be close to the 10 grand. FHA is 3.5%. So what are you going to have to do to get 3.5%? I don't even have my calculator. Somebody take 10,000 divided by 3.5%. That'll tell you where you're at. To what is that, about $300,000? Yeah, it's close enough. You'd have to be buying a $300,000 with an FHA loan to go over 10,000, which could be done. So all that. So it's called the Good Funds Law. Good Funds. Under 10,000, they now will still accept a fee. So I guess they're willing to get screwed a little. But here's the problem. This isn't like using a certified funds to buy a motorcycle where I can pay you, get on the motorcycle, and you never see it again. That's the other problem I have with this. I can understand a good funds law if you were buying a car or a motorcycle or something I could hide and lead, but it's not like I'm going to give you fake money and move into the house on 12 Smith Street, because guess what? You're going to end up coming to see me at 12 Smith Street and either arresting me or taking more money or suing me or what. So the good funds law, I understand, is a really warm and fuzzy, makes you feel good stuff. Personally, I think it's not needed because nobody would be dumb enough to do that and then move into that house. I don't know. Maybe they're worried about somebody doing it and then reselling it to an unsuspected uh, owner occupied who moves in and goes, "But I paid for it." And yada. So I guess maybe that's what they're doing it for. All right. So the cost of the money to wire is going to be a burden that someone's going to have to bear, and we're going to have to figure out a way to do that. It probably won't happen a lot. Some title companies now, if the down is or the money they have to bring is less than 500, I saw one the other day where the title company took a personal check from the buyer. All right. So, any questions? We covered RESPA, and I think we covered the crap out of that and beat it up. We covered the truth in lending. We covered some of the new forms and the old forms. We covered, the Dodd-Frank and the CFPB, which is the Consumer Financial Protection Bureau. We also checked in on a little of the Good Funds Law. Anything else? Okay, I'll tell you what, that's going to do it for the day. Tomorrow, we're going to spend 4 hours doing license law. Yes, sweet. And trust me, one is hard to get 4 hours out of that. And two is no matter how exciting it is, it's still pretty boring. And I really cannot make it exciting at all. All right. If you got any questions, feel free to email me. For you guys out at home, I'm Raymond at myrealyou.com. You guys can give me a call or a text. You guys at home can give me a call or a text. 317-900-6015. Call or text or email me or Facebook or carrier pigeon or smoke signals or something. If you got questions. All right. Until then, hasta la vista. I'll see you guys tomorrow, and I'll see you guys tomorrow.